It's all starting to kick off in the financial markets. The first victim was Silvergate, then SVB, and now Signature. There's been an emergency meeting called by the Fed. Janet Yellen has come out and said a bailout is not on the cards, and even the President of the United States will be addressing the nation on a potential banking crisis. So the big question becomes, is this nothing to really worry about, or is the next big banking crisis to rival 2008 on the way? And so in this video, we'll be getting the thoughts of Cathie Wood, CEO and CIO of ARK Invest. Having been through many crises in her investment career, she'll be sharing her thoughts on three main things. First up, what on earth is going on right now? Then we'll answer the question, is this nothing to worry about, or is this the next big banking crisis? And then we'll finish up answering the question, why did crypto rally when everything is in turmoil? As always, if you do enjoy anything in the video, then drop a like, and a big thank you to everyone who does. Okay, first up, let's get an overview of what is going on in the financial system.
But if you look at what has happened here, it is the deposit outflows that have triggered the problem, the crisis. We know that venture capital is facing a bit of a liquidity squeeze. Fewer deals are being done. There is more risk aversion in the marketplace. And so these companies are having to draw down their deposits. Most bank with Silicon Valley Bank. They're drawing down their deposits because they have to. And there are others perhaps at Silicon Valley Bank who are saying, wait a minute, I'm not being paid anything here at this bank, or not paid very much, so I'm just going to put my money in a money market fund until I need it.
So essentially, this is all being caused by the Fed's monetary policy. And it turns out you can't just increase interest rates at the fastest time in history without any consequences. So as of right now, you have banks giving people 0.1% on their money, but US bonds are now giving close to 5%. And so what is happening? People are taking their money out of banks and into money market funds. But remember, banks only keep about 10% of depositors' money in cash, so they cannot handle large withdrawals. And so the big question is this just a problem for the smaller banks, or is this going to cause a major financial crisis?
But we're beginning to see brewing here a banking crisis. And the question we have to answer, is this going to become systemic like Lehman Brothers in 08 or 09? Or, and we're betting on this latter one here, is this more like 1994 when Orange County went broke, and that created a crisis to which the Fed responded? We think it's much more like 1994 because the setup was similar. I think this time, just to cut to the quick here, I do believe that with the banking failures that we are seeing, Silvergate Bank, Silicon Valley Bank, and there may be a few more regionals, but we do not think this is a systemic banking problem. We do think it will cause a different kind of conversation at the Fed. We've been talking for a while about monetary policy and signals that that monetary policy had gone too far in terms of tightening. And I do think bank failures are a wake-up call very often for policymakers generally and the Fed specifically. So we think that's going to be the case this time as well.
And then over the weekend, as all of this was playing out, the fifth largest crypto, USDC, which has a $40 billion market cap, suddenly depegged from the dollar, dropping to 90 cents. And remember, this is meant to be one of the most trusted stablecoins in crypto. And it looked as though crypto was in a major crisis itself and about to have another crazy drop in price. And what happened? Bitcoin suddenly rallied over 10%. So what is going on? Why did crypto rally during all this chaos?
On CNBC yesterday, and Silicon Valley Bank was breaking, and I wasn't even supposed to be talking about that. I was supposed to be talking about innovation. But I think Brian brought the topic down to, see, crypto dominoes still falling, hearkening back to Luna Terra last year and FTX and 3AC and Celsius and all of the implosions. And what I said to him is, if you think about it, first of all, just think about crypto. The Bitcoin blockchain and Ethereum, those two blockchains have not skipped a beat. There have been no transactions interrupted. The smart contracts, which are rules-based, when there's a margin call, a stock goes down or something drops in value, there's an automatic margin call. It just happens automatically in this over-collateralized system. And so this is nothing to do with crypto. In fact, Silicon Valley Bank, I don't think you're good to see a mention of crypto at all there. So it has nothing to do with crypto, but it does have something to do with what happens during banking crisis usually.
This week is going to be a very volatile week in the financial markets. With 3 banks now failed, many believe this is the next 2008. However, Cathie Wood does not believe this is going to be the case. She believes this is just going to impact the smaller banks, and it's a wake-up call for the Fed to change policy. The reason crypto rallied is because Bitcoin was created after the last banking crisis of 2008, after all the mismanagement of money and bank bailouts. Crypto is the solution, and even after one of its biggest crashes last year, blockchains like Bitcoin and Ethereum have not skipped a beat. Every transaction has gone through, there's been no downtime, no one has needed bailing out, and they are running 24/7, 365 days a year. So there you are, guys. Hope you enjoyed. Some crazy times going on in the financial markets. Any questions or comments, leave them below. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. And I'll see you in the next video. Bye for now.